We actually have an RSI divergence here. So you can see how we were painting higher lows. So that's good. And you could make an argument there's a market structure break right there. So this could be a bullish divergence, but that would be predicated on the asset price itself making a low, then us making a lower low on the asset price on that move there, and then the market moving off. So you've got lower lows in price, but higher lows in the indicator. So let's see what we had happen. Monthly chart, do we have any kind of bottom there yet? I don't think so. Weekly chart, we're right up against the bottom end of the range. But you can see where the bottom is. We could still fuck around here a bit. So just be forewarned. Daily chart, we had a nice bottom. We had a big rally. And unfortunately, that might have been the actual rally. This often happens. So the breakout was at 3. It made to 4. And it looks like they ran the stops. That does happen. I'm certainly not going to say that this doesn't happen. And this is where this game gets really difficult, because you might have looked at this and said, well, that's a nice bullish divergence. Then you look at this and you say, well, you know what? It looks like RSI has bottomed. And then I guess this is specifically to your question. We actually have an RSI divergence here. I don't think so. So you can see how we were painting higher lows. So that's good. And you could make an argument there's a market structure break right there. So this could be a bullish divergence, but that would be predicated on the asset price itself making a low, then us making a lower low on the asset price on that move there, and then the market moving off. So you've got lower lows in price, but higher lows in the indicator. So let's see what we had happen. So that was through here. Oh yeah, it does look like it did, eh? This looks like this was a lower low there. This might have even actually made a double divergence, because that's a lower low as well. Is that a higher low? Yes, it is. This is actually a double divergence. So there's a divergence, and there is a divergence. And this is even a move. Well, no, actually it isn't. 50 lines way up there, right? So a bit late. But divergence there, yes. And did this make a lower low in price? That low is 301, and this low is 299. So it did make a lower low. So you got a double divergence there. I think what happened here is just I don't know the fundamentals, but I think what happened here was this thing basically set up a trade. And there is your bottom. There's your W right there. Boom. Something happened. And actually, this would be really interesting to see what the news was that actually drove this. There was a huge pop. So I think the buy signal was from 333. Market moved its way all the way up to 430. So it literally added a buck, or about 30%, somewhere in that neighborhood. I wouldn't even be surprised if this was fog and bombs. Yep. So there's 4669. And I also wouldn't be surprised if this was some sort of like 38.2. So this was the lowest low. That was the high, and reload zone and others. Boom. Oh, didn't even make it to there. So actually, this is a really good example where previous market structure, this was such a horrendous failure here that somebody just said, look, if we can get anywhere back near that level, and then there's also this low here. If we can get back anywhere into this window, for God's sakes, just get us the fuck out of there. So you had 4669s, you had this old market structure level, this old market structure level, and that explains why we stopped there, which sucks. I'm not going to sugarcoat it, especially if you're like buying this and going, okay, now I'm going to sell half on a double and get rich, which means I had to look to sell up here. I've often told you guys that I would actually want you to use the 50% level as your price objective. And if you're doing little old ladies and stuff like that, well, you don't even really care whether this bottom gets busted out here. You're just coming in here and you're buying against the bottom end of range. So little old ladies, I really wouldn't have a problem if you did buy in here. In fact, you could even make the argument like little old ladies would be like, I can buy at or below. And actually, there's a pretty high number here, right? So I can buy at or below that number there. Really good example of that venture cap. Remember I said earlier to that person, I think it was this chart, I said, probably draw your 78.6 to 88.6 fib, because these things actually work really well as sort of like a venture cap reload zone. So I think that was actually the reload zone down there. As I teach you in basic school program, there's nothing wrong with that. Anywhere along here at or below reload zones, little old ladies, you're perfectly fine to step in. If you're going to trade this, then I think what happened here, like we said, we had lots and lots of divergences. There's great divergence signals here. Great trade location. Great divergence signal. Great W. The only problem is it just didn't produce that big of a trade. But could you make an argument from a trader's perspective that this thing produced like a 2-to-1? So something like you're going to buy that W right there. You're going to risk to a break of this low here, the left-hand part of the W, and you're going to take some profits at 2-to-1. So that's right into that level there. Take some profits, move your stop to scratch, and like instantly, literally before the day even finished, this is a daily chart, eh? So as the day was winding up, this thing was already starting to melt down. Next day opened up, boom, you're stopped out on the remaining position at scratch. Boom, you're gone. So I think there was a trade here. And to answer your question specifically, I actually have no problem whatsoever with the way that you drew these divergences and you using this to frame your entry. You wanted to use the MACD. I personally love the MACD histogram just because I like it, though. That doesn't necessarily mean you have to use this, but I would definitely feel very, very confident that you got your bullish divergence on the MACD histogram here. Then on your RSI, you want to wait a bit. You got your MACD divergence, or excuse me, RSI divergence, bullish divergence here. Then you got wait a bit more. Jesus, where the fuck is this goddamn W that I'm waiting for? And another divergence comes in here. All right, through this. So now I've got like double D's. Does Brian like double D's?